play a new game. Let's play, I call it hostage versus non-hostage. As in, which companies are really hostage to China and which ones do we just assume are hostages? I'm going to start with the most obvious one, Caterpillar. Hostage or non-hostage? Geez. I don't know. Okay, look, the company's going on record saying that China only accounts for 5 to 10% of their business, but nobody cares. No one hears them. Oil's actually more important than the People's Republic. Pipelines, construction, they're more important. Yet Cat stock trades like it's hostage to China no matter what, and it can't seem to shake it. Cat wins when oil goes up, but nobody seems to care. Yesterday, stock got dinged by a critical downgrade after a run from 115 to 132. Why? Based on trade talk hopes. But with more hope at an imminent deal on the horizon, Cat stock made up for yesterday's losses and then some today. Big move. I say let's say Cat's totally hostage, despite the fact it shouldn't be hostage at all. Can't swing it, can't shake it no matter what. All right, what's non-hostage? How about Bank of America and Wells Fargo? Thanks to the rise of ETFs, though, these two stocks trade with the rest of the banks, which people think somehow are hostage. There isn't enough individual stock picking in the group anymore. Definitely not hostage, these two. They're largely domestic banks. Frankly, I think they're both opportunities down here versus their compatriots, which are thought to have more China connections, even though those connections are really tenuous. Deer, hostage. Anything agriculture is right in the crosshairs of the trade war. If you don't have the Chinese in there buying our crops, the assumption is that farmers won't have enough money to buy new gear. Deere's numbers are most likely to be too high. 3M, totally hostage. You cannot get a rally in the stock without a turn in China. There's just too much that isn't working at 3M. After the presentation they made this week, I'd argue that analysts have to cut numbers. This one's dicey. Broadcom, not nearly as hostage as people think, as we learned last night when they reported, because its recent acquisitions, CA and Symantec, have diversified the business away from China. Hock Tan, brilliant CEO, knows what can happen if you're too linked to China, like we're seeing with Skyworks Solutions. I think Broadcom's a good place to go now that it's been de-risked by a so-so quarter. Down 10, I say start buying, use a wide scale. The Cloud King, Splunk, VMware, Workday, not hostage, because they just don't do enough business in China. PVH, the parent of Calvin Klein and Tommy Hilfiger, hostage. They're seen as getting too much of their sourcing from China, which means they'll be hurt by the tariffs. The only thing PVH has going for it is the gigantic, almost $10 million insider purchase of Mad Money friend of the show, Manny Chirico. He's the chairman and CEO. Now, it's been said that this company is too linked with ailing department stores like Macy's, so his buy might be idle. But I don't believe in idle insider buys. Nobody knows more about this company than Manny. Still, no reason to buy it here. Just had a move on that insider buy news. Hold it, though. NVIDIA, one of my favorites. Named my dog after it. No, they did not name the company after my dog. NVIDIA, hostage. After its big run, NVIDIA needs this Mellanox deal to close, and so far the Chinese haven't checked off on it. Now, if they do get Mellanox, it would raise numbers, as NVIDIA is basically buying the other side of a board that it makes for the Internet of Things reach out. So, yeah, hostage. All right, what about semis like Xilinx and Marvell? Xilinx is hostage because so much of its sales depend on China's 5G build-out. Marvell is perceived to be a play on 5G everywhere but China, but because they've already told you they diversified away from Huawei, the PRC pariah. Hey, by the way, they're killing it with Samsung, which is why that stock, which my Chapel Trust owns, has been so strong. The fact is, most companies that did business in China haven't been able to get out of China with the speed of, say, Hasbro or RH, which reported a great quarter this week. Come on, it's easier to move toy or furniture manufacturing to another country than it is to move high-tech component construction or assemblage. And even a small amount of China exposure can hurt a tech company. Cisco, for example, has very little Chinese exposure, but it was still enough to kibosh that last quarter. Only Marvell Tech seems to have worked hard to tell a non-hostage story that people thought they were hostage. Now, why did I go through all these examples? Because you better get used to playing hostage, non-hostage, as I don't have much hope of a swift resolution to the trade negotiations. Earnings season, people, is right around the corner. And this time, I expect pre-announcements, precisely because for many companies, China is still a major source of growth, and they can't get out of there fast enough to escape the impact of tariffs. So you need to figure out who's a hostage and who's free, and get clear before we get to earnings season. Damn Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.